If you own zero Bitcoin, you're a fool. It is the best asymmetric investment opportunity I've ever seen in 35 years of managing risk. If people embrace the thesis that Bitcoin could be viewed as credit default swap insurance on USA and all other countries, well, it's trading about 1/7 of its value just for the USA. Just imagine the idea that I laid out with the USA. Take that for the USA, add in all the G7
G20.
nations.
Okay.
Yeah, go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin using credit default swaps.
In a recent interview with Kitco News, Bitcoin strategist and executive director at Validus Power Corp, Greg Foss, spoke about the banking crisis, bailouts, and currency debasement, among other things. But what really caught my attention was his thesis that Bitcoin should be viewed as credit default swap insurance on sovereign debt. As Greg says in his interview with Michelle Makori, credit default swaps are basically insurance on the default of any counterparty. In this case, the potential defaulting counterparties would be sovereign countries, including the United States, which is approaching $200 trillion of funded and unfunded liabilities. Greg calculates that Bitcoin is trading at around 1/7 of its potential value as CDS insurance on sovereign debt, based on the United States alone. He argues that Bitcoin is far superior to any other asset for this particular application, adding that unlike typical credit default swaps, Bitcoin has zero counterparty risk. I found Greg's take on Bitcoin to be very interesting. Although it was new for me, Greg has apparently been saying this for years. The difference now is that some other big finance guys, especially credit guys, are starting to echo Greg's sentiments. If you find some value in today's video, please let me know in the comments. And don't forget to like and subscribe. I appreciate you all. Now back to the interview.
You can look at Bitcoin as being insurance on the failure of a basket of fiat currencies, a basket of sovereign debt. And in that calculation, you can take the open market CDS spreads and multiply those CDS spreads by the outstanding debt of a nation. And let's do it really quickly for the USA. All right. 5-year CDS to make the math easy on the USA. 5-year CDS on the USA, we're going to use a number of 40 basis points. That's low, but that's an open market credit default swap rate on 5-year CDS, which means it's got an 8 basis point per year tenor. Okay, you take 5 years, you divide it by the 40 basis point cost of the credit default swap. What does 40 basis points mean? It means it costs you $40,000 a year to insure $10 million of US debt against default. Seems like a fairly minute amount of insurance to protect, or premium, an insurance premium, to protect $10 million of US debt, but it's not zero, which is to say there's a default risk according to the market. So if 5 years is 40, what would a 20-year CDS equivalent? They don't trade at 20 years, but let's put out a 20-year number. 20 times 8 per year gives you 160 basis points. Now, the total funded and unfunded liabilities of the United States of America is approaching 200 trillion US dollars. 32 trillion of funded debt, so that's debt that's existing in the system, and another 170 trillion of unfunded liabilities, which include future Medicare and Medicaid obligations and Social Security to the public. So $200 trillion is the liability just of the United States, Michelle. You take 160 times 2 trillion, 200 trillion, and you get, I'm doing it in my head, $3.2 trillion would be the implied insurance value on the United States. $3.2 trillion just on the United States. What is Bitcoin trading for? Well, about $500 billion. Oh my God. If people embrace the thesis that Bitcoin could be viewed as credit default swap insurance on USA and all other countries, well, it's trading about 1/7 of its value just for the USA. And here's the really cool thing. There's no counterparty risk. Bitcoin is not an insurance company. When you hold it in self-custody, You don't have to worry about buying this insurance from an insurance company like Bear Stearns. See, when I was trading credit default swaps, I had an exposure to Bear Stearns that meant I thought I was going to have insurance from Bear Stearns. And guess what? When Bear Stearns looked like it was going to fail, I had to run out and buy insurance on my insurance company. You see how this whole circular thing works? Bitcoin is so beautiful because there's no counterparty. So there's a way to value it, and there's a way to appreciate that it has no counterparty risk. And then you could say to me, well, Greg, isn't the same thing said about gold? And I'd go, yes and no, because gold has no fixed supply. It's not transferable or portable like Bitcoin is. And most importantly, it's not auditable. There is no blockchain to audit it. And I still like gold, don't get me wrong. But at the end of the day, Bitcoin is so superior as not only a technology, but also as an auditable asset. That is why I love Bitcoin, as effectively, in my view, from a credit trader's perspective, my whole life, it is the most beautiful insurance policy on the failure of fiats globally. The USA will be the last one to fail, Michelle. The USA will be the last fiat to fail, but there's 150 other fiats that will fail before the USA, and that's why it's valuable to places like Argentina. If the thesis is leaking out, it will, be spread by bigger money risk managers who tend to look at it from a credit lens. And I will tell you, another guy that I have enormous respect for at Golden Tree, Tannenbaum, Steve Tannenbaum, he loves Bitcoin for a similar reason. And all I'll tell you is it resonates with the credit guys more quickly than it resonates with, firstly, equity guys who, in my view, are not always the sharpest tools in the shed. And then the run-of-the-mill, mom and pop. It takes a long time to permeate the entire spectrum, Michelle. So yes, everything has subjective value, but I'll just tell you, for guys that have spent their life in credit, man, it's like the penny drops right away. They're like, oh my God, this is exactly the hedge I've been looking for my whole life. Everybody can use different ways of valuing it. Other people can value it based on a technology. Other people can value it based on an information transfer protocol. So technology stock guys who I know have bought Bitcoin in Canada, they think of it as a technology, not as an insurance product. And then credit guys think of it as an insurance product. And you may think of it as totally something else. Store of value, store of wealth. All of this is what determines an open market price on Bitcoin. And that's the beauty of unmanipulated market. Bitcoin is unmanipulated. The fiat Ponzi is manipulated by guys like Jerome Powell, who gets up there and tries to manipulate your cost of funds using antiquated technology and rear view mirror driving, okay? This is the problem with capitalism today. Bitcoin is a free and open market. It's a thing of beauty, and it means different things to different people, and it can get valued in a whole lot of different ways. Ultimately, it settles on a market price that is not manipulated. It's beautiful. Just imagine the idea that I laid out with the USA. Take that for the USA, add in all the G7
G20.
Nations. Yeah, go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin. Using credit default swaps. Hey, it's trading under 30,000. It's trading at let's do the math. It's trading at 1/27th of its intrinsic value, according to, I say the word intrinsic. You don't agree with me. I don't care. It's still 1/30th or 1/27th of the value that you could put on top of Bitcoin as a valuation metric. I don't sweat it. It's so stupid cheap. Don't overthink things. I could even give you a higher target price based on a share of total addressable market. I don't want to go there. I'm just going to say, if you own 0 Bitcoin, you're a fool. It is the best asymmetric investment opportunity I've ever seen in 35 years of managing risk. And we're listening to guys like Taleb and Charlie Munger, who are conflicted fiat Ponzi fools who are trying to say it has 0 intrinsic value. I'll take the other side. Thank you, sir. Because I think it could go many times higher.